So I know you obviously trade from masses of different fascias and brands, but is it possible to generalise how the British consumer is right now?
Yeah, I think obviously different consumers have different spending habits, but we have diversified our business through the elevation strategy into sport, premium and luxury. We've got the privilege of being strategic partners with some of the world's best brands, and we also have our own brands such as Carrymore, Slazenger, Everlast, Jack Wills, which can offer more value for the customers while still giving the company great gross margins.
You mentioned the move towards luxury and premium lifestyle goods. How unfortunate has it been for you that this has coincided with a downturn in the luxury market globally?
Well, you say that, but we've been diversifying on purpose. Diversification is by definition making sure that you can capitalise on the good times and the bad times and having a well-rounded estate. Unfortunately at the moment, the luxury division and luxury brands around the world are suffering a downturn, but we've invested heavily in our flannel store estate up and down the country. So we believe we're best positioned to capitalise on the market as and when the luxury demand comes back. And that's the benefit of being a resilient business which is diverse, because you can benefit from other parts of the business to support less so performing parts.
How optimistic are you that luxury will come back in the near term?
Well, if you look at global luxury brands, these are some of the most well-known brands in the world. They've got deep heritage and they are quite cyclical. I don't believe they're coming back soon, but in the medium to long term we're very confident in our strategy.
Now, another big part of the strategy of late has been buying in property assets, shopping centres and so forth. What's the thinking behind that?
Well, if you imagine Frasers Group as I said, a very diverse set of propositions. We've got sportswear, we've got flannels, Frasers, we have gyms, and in any large town or city we can occupy over 150,000 square feet. So when a property asset becomes available, we have the insights and the knowledge of what's trading well, where we can move our businesses into that shopping centre and almost underwrite the future of the occupation, drive new brands into the shopping centres or retail parks, bring new customers in, and then in turn bring other brands in from other retailers.
How nervous should your competitors be that in some cases now you want to be their landlord in some locations?
No, we see we want a great tenant mix. That's with Frasers Group as a tenant, but also other tenants. We understand that you need to create an ecosystem so it's attractive for local consumers, and we welcome to work and sit alongside and collaborate with other retailers as well.
Obviously a lot of the big guns of the commercial property centre have kind of been turning their back on retail as an asset class. Do you see them having got out at the wrong time? Do you see the market recovering?
No, I just see that we've got an edge on the market. We obviously have a lot of insights into how we trade in certain locations. We understand where we want to increase our store, where our lease expiries are ending. So we have a lot more flexibility and knowledge than, say, a traditional property landlord, which gives a little bit of an edge on the market.
You now own more than 40 brands within the group. Are you looking to pick up more?
We're always evaluating opportunities, and with this, with the current environment, opportunities are coming up more and more. But it has to add value to our overall ecosystem and add value to the end consumer as well.
Are there gaps in the portfolio? Are there segments of the market that you're not in as much as you would like to be?
In terms of own brands or in terms of our proposition? We work with pretty much all global brands now. There's very, very few we don't work with, and that's complemented by our own brands. Obviously, if we can acquire more brands at attractive prices, then we're always open to opportunities.
Now we've got a new government in place. One of the first big eye-catching announcements has been a clampdown on shoplifters. Presumably you're quite pleased at that.
Yeah, we have seen a slight increase in loss from shoplifting. We've got tight controls in place, we're monitoring it, but yeah, it's great to hear that the government want to do something about it as well.
They're also changing the labour laws. They're going to outlaw 0 hours contracts. How much of a headwind is that going to be for you?
Well, our employees are the lifeblood of the business. Our workforce, it's what makes the whole ecosystem work. We've done surveys in the past, and the 0 hours contracts have been a very positive. We've gained very, very positive feedback, and that's because it gives people the flexibility of when and when not they want to work. but ultimately we're in the hands of the government of what they decide.
But you'd be unhappy if the government were to outlaw them?
I think some of the employees and workforce would be annoyed.
Now, one of the other things that the retail sector in particular has been hammering away at the last government for years and years was business rates. Are you optimistic there's ever going to be any reform on that front?
Hopefully in my lifetime there will be. I mean, we've been talking about business rates for a long time. We occupy huge amounts of square footage around the country, and it needs a significant reform. If the government do reform business rates, I believe there'll be inflows into capital expenditure on the high streets, and you'll start to see more new stores like this from all retailers in the UK.
Do you think business rate reform then could be a key plank in levelling up, if you still want to use that term?
Yeah, I think so. I think it will encourage investment from retailers who are more hesitant. It's cheaper for them to sell online. Brands want to maintain their image, they want to invest in their store estate, and when you're getting charged a punitive rate on tax for your store location, it's a disadvantage to invest.
What else would you like to see from the new government? I mean, they're talking an awful lot about skills. You employ more than 30,000 people. Is that something where you think you could benefit from the government lending a hand?
Yeah, obviously the whole economy could benefit from a higher skilled workforce. We just hope the government's pro-business like they say they're going to be.
What about the state of the sports apparel market right now? I mean, obviously Nike seem to be in a spot of bother. The share price is languishing at a 15-year low. What do you think has gone wrong at Nike?
I'm not going to comment on Nike particularly. All I would say is that brands have been focused on direct-to-consumer, selling digitally themselves, and they've now, I think more than ever, they recognise that they need strategic wholesale partners. Now, Frasers Group is a strategic partner because we invest in regional stores, we do online to offline, we can showcase their new product innovation, whether that's running trainers, football boots, in a physical environment alongside other brands, and let the consumer decide if that innovation is worth the demand. So I think that Frasers Group's in a very strong position now to work more strategically with brand partners than ever before.
I mean, it's quite an exciting period in terms of the sports market right now. You've got a lot of new hot young brands coming in, the likes of Castor. What sort of opportunities does that present for Sports Direct?
I think the opportunities are endless now. After 9 years of working on this strategy and improving the brand relationships, the store environment, the marketing, the digital proposition, we're getting more and more brands now approaching us about coming into the business. We've recently launched with On Running in the running area. We've launched the North Face for the very first time in Sports Direct. Brands like Castor are coming through. Crocs has recently launched the business. So we're seeing the momentum really build behind Sports Direct, and that's why we're investing in such big stores to allow for these new brands to come in and thrive within our environment.
Now, the results that you're reporting today don't cover the periods that we've just had with the Euros. Obviously, we've got the Olympics ahead. Give me an idea about how you think the business will benefit from those big marquee events.
It's a summer of sport, and obviously England getting to the finals, not quite winning, definitely helps. We're looking forward to the Olympics now in Paris, but yeah, it definitely helps.
Now, it's nearly 2 years since you became CEO. It's nearly 2 years since Mike Ashley stepped off the board. A lot of people will be interested to know what Mike's day-to-day involvement is with the business.
Mike's a consultant to the business. He's on holiday quite a lot as well, so he travels, he's enjoying his time, but he's a very supportive shareholder, and he's happy to help in his areas of expertise at our request. So he'll help with supply chain, warehousing, where we ask. Mike's a genius retailer of his generation, and it's a great resource to have him at the end of a call for advice and his skill sets.
If I look at the balance sheets and the amount of cash that you're generating right now, some would say you're slightly undergeared. Does this mean you're keeping your powder dry for a big acquisition?
We've always been conservative. We like to have conservative borrowings. We're a cash compounder, so we throw off a lot of operation cash flow, but we reinvest it back into the business. We've not paid a dividend, as far as I can remember, for a long, long time, and that money goes back into the business every year to fuel our growth and to fuel future opportunities. That's why we've got such a diverse business now, because we're constantly reinvesting in the asset base.
Now you're changing the reporting structure as well. You're now going to have 5 reporting segments in future, one of which is financial services. What's the opportunity there?
Well, if you imagine Frasers Group as an ecosystem now, like you said, sport, premium luxury, sports direct, House of Fraser and Frasers and flannels, Frasers Plus sits on top of it all, giving a single view of the customer. We can now see, give the consumers Frasers Plus, they get access to the world's best brands within sport, premium and luxury. They can earn rewards through this program. We get a single view of the customer so we can market to them more meaningfully. There's buy now, pay later. We don't work with a Klarna or a ClearPay or any other buy now, pay later propositions. It's all done through Frasers Plus, and it's also regulated. So if they want to roll over into a credit facility and pay interest-bearing balances, they can do it at their choice, and it's all controlled by Frasers Group. And we're actually even opening that up to third-party businesses now to make the Frasers Plus proposition even more attractive. So we've just launched with the Hook Group, and it'll be on My Protein, Look Fantastic and Cult Beauty, again adding more value to that consumer so they've got one place to shop.
And what would you say to those folk in the city who say Frasers is a very complicated business these days? You've got umpteen different brands, you're in all parts of the market, you're now going deeper into property, you've got stakes in businesses like Hugo Boss. What would you say to people who say it's just too complicated a business to understand?
I'd say the people who look at us closely, understand and work with us and come into the investor results and sit down and attend the investor roadshow understand us very clearly. It's broken down into 3 pillars effectively. We work with the best brands globally. We've got our own brands to complement that with higher gross margins. We've got a diverse growth opportunity, not just sports, but premium and luxury and international. We've also got property and financial services. We've got many diverse growth opportunities, and we're a cash compounder. We produce a hell of a lot of cash every year, and we reinvest it back into our asset base for the long-term benefits of the group.